The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate your growling and problem with us out here. We have the Dow Industrials down 1530, Nasdaq down 460, S&P's off 163. Gold contract down $2, trading at $16.70 an ounce. We had silver down 50 cents, $16.73 an ounce. Light sweet crude. This is a number that's pretty amazing, folks. Down $8, trading 33.38. Well, they're all amazing numbers, actually. 10-year note down 1.5 at 139.14. 30-year bond off 4.5. Almost 5 at 185.29, and King Dollar down 817 ticks, trading 95.141. Euros at 114. The yen is out there at 102, and the pound is at 131 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Tom is sick as a dog today, unfortunately. Markets, bottom line is that you get an acceleration down in a monster way. There's no doubt about that. We have the Dow Industrials right now down 5.5%. The S&Ps are off 7, and you get the Nasdaq down 5. Bonds, so the 10-year, we've been talking about the 10-year. The bottom line, 10 years in an ABC structure on the way down. And your price projection on that 10-year, actually, folks, is 0.15 of 1%. We made it down to 0.31 of 1% right today, this morning. Right now, you're at 0.51. We get over and we take a look at that gold contract, what you have in the gold contract out here. You've had quite a price spread. Last night, you get down to $16.58. You had a high out here of $17.04. You're down $2. Now, what is intriguing here is that down $2 in a market like this in gold is pretty good, actually, because we have a liquidity event out here. There's no two ways about that inside the broad market, and that's that's some heavy dealing out here. If we go take a look at it. And we take a look at the S&Ps right now. So what you had last night is this. You were down 5% last night. And an overnight session, folks, 5% is the limit down. So at the open today, all it had to do is go down 2%, and that's the 7%. That being said, bottom line is that what you have out here right now is that we had a low established at 27.15. You're at 28.10 right now. So we're going to have some big action out here all day long. What the S&P has done, and this is what you really want to watch for, is that the S&P right now, the SPY, has tested the highs of the lows of December of 2018. That's a big number, folks. I think we got right there. 1 second. Let me make sure of this. That's the highs of on the monthly. On the month. That's what it did here. Let me see this. I believe that's what we did. Yeah, we did. Okay. So this number is going to be crucial out here today. And this is what it is. It's 280.40. We hit 273. You're at 281 right now. If you get the rejection right there, guess what, man? That's the first bounce. So I know that sounds bizarre, but bottom line, that's how it shakes out. Because that bar has monster volume. And in fact, if you have the out of time in the trade, you're going to know that markets love going back to the especially when you get a downdraft, to the first place where you had last time we had volume, and that's the number. It's 280.40. Let me just go over to the NDX 100 and take a look at the NDX 100. And we pull the NDX 100 up, and we'll do the same exercise. And that's 173. Oh, see, this is cool, man. This is interesting. So what you have here, we've been talking about, the NDX 100 has always been the strongest indice. Not always. I'm talking about in this bull run. So the NDX 100 is strongest index, Nasdaq Composite right there with it, S&P next, Dow Industrials the worst, okay? And so if we go over to the Dow, let's go to the Dow, and we're going to see here, I suspect, is that the Dow is going to be right through this level. Yeah, it is. Okay, so you can really learn a lot about markets right now, folks. So the Dow Industrials, that got through that level last month. 25,980 was the high of that level. Low of that level is 21,710. Right now we hit 23,818, and right now you're at 25,980. So that basically says it all. And what you do have is this, is that NDX, okay, if you are basically, you have a stomach of steel, bottom line, it's going to be the NDX 100 that you want to be in, because that is the strongest market, period. And we take a look at the NDX 100, and you're going to see the only stock that is positive inside the NDX 100 is O'Reilly Automotive. That's up $1.82. So, big number. Now, date-wise out here, folks, this is pretty amazing date-wise. So, what you have is this. You have the Dow. This is, I think, the 11th anniversary of the bull market today. Okay, the bull market started 11 years ago. But you know what this also is? Tomorrow, this is the top of the NASDAQ in 2000, okay? So it's pretty amazing, man. You know, this March time frame is something else. Let me just look at this. NDX. Put this all the way back to 2000. I just remember this. You know, I remember it, folks, is my father's birthday is March 10th. And for some reason, the people in my family, I've had highs and lows inside the marketplace with all these birthdays, so it's a lot easier remembering. Okay, so let's see, 2020 we're at. Okay, so I got to bring back this 30 years, okay? And yeah, there it is. It is. It's that high was generated at 48.16 inside the NASDAQ. And then we crashed down to 795. Pretty wild. So bottom line is that you get a lot of moving pieces out here. You know, we'll see where this baby shakes out today. The market's actually performing pretty well in the context of how the rest of the markets around the world have performed. What we had out here is that in the Asian markets last night, the Asian markets were down 4 to 5%. European markets, 7-8%. Now, we're only down 6%. You know, when I say only, it's still a big number. There's no doubt about that. But bottom line is that, you know, that's certainly not as bad as this thing could have been. We take a look at the oil contract. Oil is just pretty wild, folks, okay? We hit $27.34. The last low that was out here, we've been talking about this, is $24. Bottom line, let me see. I got to put this on a continuous contract. Okay, so you get this on a continuous contract. Let's see. I'm going to bring it back 20 years. I don't have to bring it back 20 years, but I just want to see just how heavy it's coming into that low. Okay, so yeah, your low that was established in 2016 was $26.16 on this continuous contract. We just got to $27.34. You know, we're at 33 right now. If you break this, that could be some serious business, you know. Well, it already is serious business if, in fact, you are in the oil producing business. ExxonMobil, at bottom line, ExxonMobil, the baby was down another 10%. It was actually down more than 10%. It was down to $40.80. Right now, you're at $44.35. And, you know, that Exxon has been leading that physical oil market lower. Dow Industrial's down 1450, Nasdaq off 438, S&P's off 160. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 1,300, Nasdaq's off 400, S&Ps are off 146. We get over and we take a look at the dollar, folks. Dollar basically got to that 95 mark, crushed that baby. 94.60 we got out here today. I suspect what we're going to see out here, that dollar is going to make its way down to the 88 mark. That's the February low. 88 is game in spades. We go over to euro. We take a look at the euro. I believe the euro is 125. Right now you're trading at 114. You bring this up and you're, 125 is game. And then we go to the yen and we take a look at the yen. You're going to see the yen out here. We traded down to 105 last night. This thing is 99, I believe. Let me pull this. So you got, 99. February, so in the yen, that's June of 2016. We break that, and then you're going to get basically 73. So what gets intriguing here, let me tell you something. Gold is holding up incredibly well, folks, as is the gold stocks. Actually, let me look at, because when you get a market like this, you can expect that you take a month. Yeah, they are. They're holding up beyond belief. So you get a different animal out here, man. I mean, if you're a trader, you want to be in this market, man. So we take a look at the gold contract. You got up to 1704. Right now you're trading 1666. This thing wants to go to its all-time highs, man. Bottom line. 1795 is game in spades. We pull this back. What you're going to see is, in particular, I can tell you, if we can hold gold out here today with this market, you're going to go like a rocket ship. Because what has happened is that the yen has got so much stronger that the acceleration inside the metal market will be pretty intense. We know that the notes and bonds, bottom line, we're going to 0%. In fact, if we look, the ABC down on the 10-year is 0.15. Right now, let's see, Germany's already at 0.8% in the 10-year. France is at 0.4. Switzerland just went over 1%. Netherlands at 0.6. Sweden's at 0.5. This is the first time in history, folks, that you've had the 2, the 5, the 10, and the 30 all below 1%. The The 30-year bond right now is at 0.97. So can you imagine you give $100,000 to the U.S. Treasury and you get back, bottom line, $101,000, actually, or $100,997 30 years from now. That's pretty wild, man. I mean, that's about as intense as you can get. If you're in Germany, you just gave them $100,000 and you're going to get back $99,500 30 years from now. If you're in Switzerland, you're going to get $99,248 back. How's that? I mean, they're going to, whoever's going to write the first couple books about this is going to be pretty amazing as to what does it all mean. Some of the higher volume equities out here today, let's see what we have. The banks are going to get smoked. The banks, you get Bank of America now 267. Well, look at this one, man. Holy cow. OXY, Occidental. This is a beaten. So, yeah, they halted. So you have two different rules in place here. You have the 7% rule for the futures, 13% rule for the futures, 20% rule for the futures. What that specifically means is that if you're down 7%, they got to do the halt. We did the halt right on the open today because we were down 5% last night, 2% at the open. Bang, that halted it. They opened back up. The market is basically trading fine now, okay? The equity market, if you go 10% down, they do a temporary halt also, and that's what you have right here with Oxy. Bottom line, Oxy had closed out here on Friday at $26, traded down to $16.75, and they actually traded down to $14. And this baby, I'm gonna look at Rig actually, because Rig's the one I think is going out of business. And that would be, oh my God, look at this, $1.70. Rig's done. Rig's done. Yep. This is pretty amazing. Transocean, you bring Transocean back to 2008, you're $163. You just broke out all the lows, and we did it with conviction. So big number. We go to Halliburton. We take a look at Halliburton. Halliburton right now, all same day, over 10% down. They halted the equity. This closed at Friday at $13. Traded down this morning to $7.90. We put this up. Okay, so this hasn't, well, it just broke the 2008 lows. Okay, this is still not, oh, look at this, man. This is sick. $4.30. Well, here, this is going to be cool with Halliburton. So Halliburton in 2002, the high of the low is 730. The low is 430, 739 to be exact. So that's game. Now, the difference with Halliburton and Transocean is that Halliburton is a high volume high, so it's going to be hard to break that down after coming down so dramatically. So there's still going to be some companies inside the oil business that will stay in business, but it's going to be very rough, folks, when you are banging out oil at a price point of basically 30, 35, 25, all of those areas. It's about as tough as you can get. Apple, let's go take a look at Apple here and see where we are at Apple. Apple's down $14 right now. So this is intriguing, okay? You get a rejection of lower price out here on Apple in a big way, too. Now, we're going to have, this is what ends up happening. When you test a low, and if you have it with volume, the bottom line, you can get back down and test it again. Apple's showing that, guess what? It rejected this low. We hit 263. The low is actually 256. So that's a big number. Let's see what Google did, because what happened on Google on Friday, Google got back inside its range on Friday, and it rejected it, and Google came down another $68 today. Let me see where this is in correlation to. But your benchmark that you want to look out there is going to be the December 2018 level. In Google's case, not December, no, December. There it is right there. So December 1124. Yeah, this is cool, man, because we hit 1200. The high is even 1124. So even though this looks like some heavy destruction, what you do have is this: is that bottom line is that you've come back to the breakout area. That's what you did. That's what you did. There's a question here: who has the cash to buy all these oil shale companies? The bottom line is that you won't have anyone buying these oil shale companies right now because there are right now you won't, just because they're going to go bankrupt. That's what it comes down to. What ends up happening, there'll be a flurry that's going in there after the fact. But right now, what has happened is that when oil started going up again, what they did is that they came in, they had way too much debt. Okay, so they basically levered up in debt, and that's what's actually going to kill them. So I don't think, after the fact, I think it's going to be a field day out here because, I suspect oil's not going to stay at the $30 level. Stay right there, folks. Come right back. Dow down 1,400, NASDAQ off 457, S&P's off 161. We'll come right back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 1460, NASDAQ off 461, S&P's off 161. Now, we were just mentioning the NDX 100 stocks, folks. You really want to keep an eye on these, and this is why. So I'm going to bring up Amazon for a second. I want to show you something. Amazon's down $75, man, but let me tell you, this is all as this has done so far, okay, is come back to a high volume high, and reject it. It's rejected 16 let me get this on a monthly. There we go. This is so intriguing, actually, particularly in a fast market like this. Yeah, you come back. So, okay, so the NDX 100 has rejected the highs of the lows of 2018. Amazon also has. Amazon got to 1761 today. You're at 1778. Bottom line, you're at 1824 right now. That's a big heads up because it's going to be hard to break that level, folks, because of the amount of volume that we had, not just at that level from January of 2019, because we can come down so hard in October of 2018. The first month we came down with 180 million shares. We tested that with 154. Now this month we're going to have monster volume. But if you keep that rejection of that high, bottom line is that that's going to show that the NDX 100 is going to come flying back. I'm not saying it's going to highs, because my take is that, yeah, we got a long road to hoe here. But this is impressive right now for a market across the world that was down so dramatically. And what I expect we are going to see here is that you're going to see clawbacks the whole time, because what we didn't do is that we didn't go to a second limit down, and my take is that we're not going to it, that we already just saw the worst of today's market. That's how the baby is shaking out. What you want to keep an eye on in a big way is this 10-year note, because we got down to what, 10-year? I think it's 0.49. Okay, we got down to 0.31. The ABC structure is a 0.15. I mean, that's pretty close. And what tends to happen, yeah, see, you're going to get a bounce out of this. So what happens is this. Okay, so picture. Your ABC structure down was 0.15 of 1. We got to 0.31. So if you're out here trading today, I'd just keep my eye on that 10-year, because if the 10-year starts to basically bounce a bit, what you'll see is that these markets will basically try to claw back some of these points. And what happens with ABC structures on the way down or the way up, once they finish an ABC structure, most times they do something different for a certain amount of time. It doesn't mean, my take is we're still going negative rates, but you have bounces in between these. That's the real bottom line. Let's go take a look at the silver market from one of our targets out here. Let's see. J, right? SIJ. Okay. So silver's down 51 cents. No, that's not the contract I need. SI. Whoops. Sorry about this, folks. Okay, we'll get something up here. Why isn't this coming up with me? Okay, SIJ0. No, I'm not quite sure why I can't pull this up right now. It's not pulling up for me. I'll get this in the next break. We go take a look at the XAU, the HUI. Now, this is pretty impressive. The XAU is only down $6.35, and the number to keep your eye on there is 98.12. Right now, you're at 96.69. The Gold Bugs Index, look at this. So the Gold Bugs Index, okay, so hey, check this out, folks. This is really cool. So when you take a look at relative strength in sectors, right, the Gold Bugs Index got down to 226 today. You're 228. Well, the highs of the lows is 218. So that's showing that the equities that are inside the Gold Bugs Index are going to be some of the strongest equities, okay, as gold continues to higher price. Now, that's a real plus. The reason being, folks, is that they basically are non-levered stocks. And when you have non-leveraged stocks, meaning that they're not selling into the gold market, that is an indication that the gold market itself is going to go to higher price. As we look at the currency markets, fundamentally, it's saying that, period, because the dollar is going lower. You have the interest rate structures at all-time lows right across the curve. So the 2, 5, 10, 20, all below 1%. Let's go take a look at some of the home builders, because what we're going to have out here, folks, bottom line is that this is going to hit the mortgage market. There's no two ways about it. You know, last week when we were talking with our man, Mr. Bud Springs, the lowest rate he was quoting was 3.25. That's going to change this week. If we take a look at Lanao is at 55. You're at 57.35 right now. And let's see what this is doing. Okay, so you're just in a consolidation there. Let's go look at Toll Brothers. Toll Brothers is a high-end builder. It's been weaker, but that rejected $32 right now. It's at 34.58. And that's still in a consolidation. The Home Depot. Now, what we are going to get is this. So check this out, folks. You are going to get, Home Depot got down to 32, right, 34.64. Because of the shutdown in China, that's a consolidation in Home Depot. Toll Brothers. Because of the shutdown in China after the Lunar New Year and never reopening, you are going to have shortages in the aspect of supplies in the Home Depots of the world, the Lowe's of the world. The Wayfair's already hit it, it's okay? Bottom line is that you can expect that, and I expect we're going to start hearing about that probably in about another 2 weeks, because they're going to be out. I'm talking about out. Let's go to our man Jim in Palm Harbor. Hey, Jim, what's going on?
Hey, Tom. How you doing today?
I'm doing great, man. Yourself?
I'm doing good. I'm sorry to hear that Tommy's feeling pretty bad.
I know.
I'll put him on my prayer list.
Thank you. Yeah, his little boy, Landon got sick Friday night and got him pretty sick. So it is what it is. I know. So
I know how it is. I had kids too, and when they bring home stuff from school, you're going to get it.
Exactly. So we're going to look at the IVV.
Yeah, I was just wondering. I've got a retirement account that it's got the IVV in it, and I was just wondering at what level do you think it would be safe to buy again, and how low you think this downturn may go in the IVV?
Well, I think safe is a bad word to use, but stay right there. I'd say that this is a good time to buy. You stay right there, though. I'll be right back, all right? We'll come right back.
Okay.
Our phone number is 877-927-6648. We have the Dow. Dow Industrials right now down 1,400. NASDAQ off 455. S&P's up 157. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 1,400, NASDAQ off 453, S&P's off 160. We're talking with Jim from Palm Harbor. We're talking about the IVV. What you have here, Jim, okay, is that this is already rejected that high of the low. Now, when you're saying, like, I know that you trade, okay, so, I mean, the bottom line is that this is not a bad place to get in, man. That's what it comes down to. 282.15 is the number. That's the high of the low of 2018. So, I mean, if it holds there,
okay.
the SPY is already held at. I mean, if we go over to the SPY and we take a look at the SPY, what you're going to see here, we pull this back. It's 280.40, and you're at 280.79. What you could do is this. This is what you probably should do. Wait to the end of the day, man, and make sure that it stays rejected. Do you know what I'm saying? Like 2:30, 3 o'clock or something. Because if you get a rejection there, it's like, okay, man, it's, it doesn't mean you can't come back down there, that's for sure, but that's a pretty intense place that, you've just come back to the breakout. You are, however, back to January of 2018 levels, which, that's what markets like to do. They're fast, they're furious, and, the bottom line is that, there's no doubt there's a supply chain problem, there's a cash flow problem. That being said, though, the virus is going to be over. You know what I mean? I mean, not when I say over, it's like, 3 months, 4 months, whatever that is. And people have got hurt, are going to get hurt, all of the above. But this is not like the deal of 2008 when you had major companies that were over their heads, and then they went broke, and then all the people working for them went broke, and then the amount of fraud that was inside the real estate business, and everyone was basically doing liar loans. And then, of course, there's people that had nothing to do with markets that basically got hurt because there were so many other people that were committing fraud, So I think it's a different ballgame, man,
Oh, yeah. Yeah. Well, I appreciate the info. Tell Tommy I hope he gets feeling better. I hope you have a great day. It's going to be a nice one. So.
There's no doubt, man. Have a great one. Have a safe one.
You too.
Okay,
Bye-bye.
man. What's going to get so what you have here, folks, okay, is that, let me just look at this for a second. So I want to look, where did this, we know the small caps have been the weakest indice. I'm just curious where the small caps got to here. Because the small caps never made, here you go. So the small caps are going to go to the low of 2018. So 125 is the low, 154 is the high. You're already into it, so 125 is game inside those small caps. Now, what's intriguing about that would bring the small caps back to the breakout of 2016. That's how that shakes out. and they never hit the high of that 173. Let's go over to Europe for a second and see how Europe's trading. So Europe's still down 6.5%. DAX in Germany, right now, the DAX, so that's had a low out here today of 10,556. And let's see where that is getting into. So, yeah, this is going to lows of 2018 too. This is interesting. So watch, the DAX, the low of 2018 is 10,279. We hit 10,556. We get back, and that's the DAX. We go to the FTSE, and the UK. This thing got absolutely smoked. We take a look at that, and that's broken. That took it apart, man. Yeah, so this is going to be actually pretty dangerous. 65.36, and we're at 6,050. So these markets, as we watch these markets out here today, folks, it's going to be really important to see if, in fact, that number in the SPY holds. The reason being is that when the aspect of the foreign markets don't hold, you want to make sure that our market holds first, because if it doesn't hold that level, then you will go to that low, man. That low, between the high and the low, we're talking about a monster spread, because the high is 280.40. We're at 280.10 right now. The low is 233. So you're talking some big numbers here. It's too early in the day right now to basically get to understand the aspect of what type of volume that we are going to get in here. I do expect we're going to have monster volume. The real question is going to be, we've had monster volume all last week also. Well, actually, in the NYSE, that's not that big. We're at 500 million right now. That's not a big number compared to it's a 2.6 billion number that we're looking for. In the composite, we're at a 1145, and right now we take a look at the composite. The composite, let me see where this went. Okay, so the composite, the high of the low is 74.86, and we hit 79.46. So, and we're at 8,092 right now. So what you also have there inside that composite is that the composite also has not got down to the highs of the lows. What you have administration-wise, now this is going to get really intriguing administration-wise as to, bottom line, what they come out and say, number one, and number two, what steps they're going to take in order to basically try to calm these markets down. I suspect right off the bat Trump's going to blame someone. And it won't be someone around him. What I think we are going to see, folks, okay, which is going to be really wild, is this. I suspect that Pence is not going to be Trump's running mate. And the reason I'm saying that, he's set up. I mean, when Trump put him in charge of the virus, that was like the perfect setup to basically can him. So this is really going to get interesting watching how this shakes out. And, anyone and anything that he's already put in place, that doesn't last long. So I suspect this you got, I don't know, whether it's going to be a month, 6 months, the next thing we're going to hear is that, yeah, Pence screwed it up. Bottom line, we're going to get rid of him. I'm going to have a different running mate, and that's going to be the cover for the virus. So we'll see where this shakes out. It's pretty wild, though, man, thinking about it, because it's like, this is the first time that the guy's been speaking at all, and the amount of time that this administration's been in, and what a job to have, right? I mean, no one wants that job. Well, let's put it this way: you could want that job, but you want that job in the aspect that you stop paying attention to science and not paying attention to basically what Trump claims is fake news inside the scientific community. Dow Industrial's down 1,600, NASDAQ off 493, S&P's off 174. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 1630, Nasdaq off 496, S&P's off 177. Let's go into the S&Ps, because what you're going to have now is that you get a little pullback. We're going to be able to see volume-wise how we're hitting this on a 10-minute. Right now, you're 4 minutes into it, so check it out. So the lows out here were established right at the 10 minutes to 10. 10 minutes to 10, we get down to 27.15. You go topside into 28.11, so we go up 104 points in about a heartbeat, and now you're coming back into the second bar. In the second bar, the low of the second bar, folks, is 27.78, and you're going to need 84,000 contracts, and we're not even going to get close to that. So you get 5 minutes into it. We're at 23,000. Doesn't mean you can't get it. You got to wait for this bar to get finished. But this is going to be the benchmark as we're going on into TD Ameritrade Think or Swim. So keep your eye on this number. The number is going to be 2778. We're right next to it right now. You're at 2784. If you hold that number, the bottom line is that that's going to say that, okay, you get a little consolidation here for the last 50 minutes. And that would say that we'll go right back to the top of the consolidation, which would be the 2820 You break that, then you get trouble in paradise. You break that baby, and then you can get right back down to that low, which we weren't at for like a split second, folks. That low was 27.15. That was the blowout of the limit down. And you can expect these broker-dealers are going to have a big problem, folks, because what happens in the futures market is that there's plenty of futures traders that actually went way beyond their stop, can't get out. The broker-dealer community is going to have to come up with that money. Stay right there, folks. Think of Swim coming up next. Have a great day. Have a safe day. We look forward to speaking there this afternoon, 3 o'clock. Go get them, folks.